All right, everything looking good. We are live. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:05. Damn, I'm late. p.m. Eastern Standard Time on March 22nd, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right. So let's go ahead and jump right in. So we don't really need a big recap here, but basically exactly what we, including the entire market, expected to happen happened. JP came out, hit us with the 25 basis points, the 0.25% hike. And honestly, the press conference was rather uneventful. There was a couple important statements that he made. It was very clear they were kind of try to be vague about it. But in the end, excuse me, in the end, you could tell that the reporters were just reaching for just anything from him, just some kind of dovish hint. And Powell did not give it to him at all. So some people are saying that it was 25 basis points, but it was delivered in a dovish way. I think it was a complete opposite. It was 25 basis points and straight to the point. No kind of pulling it back or, saying no giving the market any kind of confidence that the Fed is ready to step in or anything's going to change. And then he cemented at the very end just that exclamation point about rate cuts before the end of the year. And he basically just said, yeah, it's not happening. So for me, that was a big hawkish tone. The fact that he cemented the entire meeting, specifically talking about no rate cuts before end of year, because right now, basically, the market is pricing in 125 basis point hike, and then at the next meeting after that, a cut. And by the end of the year, multiple cuts. And higher for longer does not mean we hike extremely quickly and then we cut right away. That's literally the opposite of higher for longer. So that being said, if we take a look at TNX, we know we bounced off that 200 exponential. Initially, we hit the 200 simple. We got the touch on the 200 exponential, gapped up here, and then had that little meltdown, come back and close the gap. We are still above the 200s. This is starting to look weak, though. It is possible if there's only going to be, I don't want to speak for the whole cycle, but let's just say hypothetically that we get one more 25 basis point hike, or maybe no basis point hike at all, just the pause. And at that point in time, I could see rates not going to a new high anytime soon. Maybe we have a spike of inflation 6 months from now or 2 years from now or something like that, and we go higher. But it could be the end of, this little run. So we don't want to get too stuck in our ways from being right for so long, because we are seeing weakness. Now, either scenario could play out. Here we saw strength into the weakness here. 200 simple gets on top, and then we fail to put in a new high, and then we consolidate at the 200s and go higher. So we're essentially around, somewhere around in this area right now. So there's still a good possibility we find support and then we go higher. But there's also a good possibility that this is the top and we roll over here. So we don't know what's going to happen. We know we're right at fair value, so we really have to just play it by ear on this one. Obviously, this thing's pretty beat up, so if it does break down from here, we're going to see basically a bounce back to retest the 200s, at which point in time, if that holds, then it's really going to look bearish, it's going to continue lower. So U.S. oil, so we got the breakdown. We're now back testing, what was that support. Depending how you looked at it, if you had this little ascending channel in, or if you had something a little bit more like that. Either way, this is basically our breakdown. We would expect to come back up and test either the horizontal or that breakdown point, potentially even as high as the 200s. But realistically now, the range to me is essentially the blue 236 fib and our white support right here. We hit the support we were looking for. We hit the target that we called out way back when everybody else was calling for $20,000 a barrel oil or whatever. We called it almost perfectly $114, cha-ching. And then we wrote it straight down to our 60-something call, cha-ching. If this area does not hold, then we break down from here. 382 is our next target. But honestly, I'm looking to accumulate all through this area. And then realistically, a back test at 236. We tested a bunch of times and then we broke down. So do we need to come back up here and test it? We don't need to. But honestly, you know, we always talk about these points like a magnet, okay? And if you've never watched the tutorial video on like the drawing tool squiggly lines, go check that out because that's really going to help your game. But essentially what we're looking for with that is the clusters. And right here, I see a cluster. I mean, this is basically what a cluster is all about. We got the 236, we have the 200 exponential, the 200 simple. We have part of that little channel, the heart line right here. So probability of this thing acting like a magnet and pulling price action towards it, in my opinion, very high. So we hit our key support that we were looking for. We're trying to get back up here to the cluster. Is this going to be supply and, you know, demand dynamics because we go into a recession so we don't get up there? Is it going to be because the Saudis cut supply? Is it going to be because Biden starts refilling the strategic petroleum reserve? Well, probably not. I'm sure he already forgot about that. But regardless, we'll see. We don't know what the narrative is going to be, but it's not crazy to think we're coming back up here to 80 bucks. It's also not crazy to think that we would go to 60. So if 60 is the target to the downside, 80 is the target to the upside, and we're at 70 right now, I mean, we're basically coin toss and we're below the 200s. So favor has to go to the bears. So there's no real trade setup from this level. And the market knows that too. You know, you either buy down here or you sell up here until something changes. Obviously, you don't do that. So XLE, we broke down below the 200s, confirmed into the bear market based on the 200s, below all four moving averages, back testing the 200s as we speak. Again, we know once this typically happens, if they're still blue, we would act as support and we'd want to buy that level. But now that they're red, now we want to sell the 200s as resistance. So again, what we're seeing take place here is macro bull trends turning into macro bear trends. So this is literally the very beginning of the macro bear trend. And this is the last trade we played to the upside, the bull trend back, or the bull play back to the 200s. And then at that point in time, instead of buying the dip, we're selling the rip because it is now officially a downtrend. And I know when you look at this, it doesn't look like a downtrend. You're like, oh, it doesn't really look like a downtrend. It looks like a really good uptrend. Well, you have to draw a line in the sand somewhere where you determine if you're going to have a downtrend, and my line in the sand is the slope of the 200 exponential and simple moving averages, and they are both negative right now. You see multiple times where one would flip red, but the other did not. Once we see them both flip red, I mean, that's it. We got to trust the process. So is there potentially more room to the upside here? Could we potentially reclaim this area and then eventually go higher? We could. But, you know, we got to give the favor to the bears right now because they are clearly in control. Okay, so we're not going to go through all these. Basically, all the oil stocks we looked at bounced off of support, either the 200s or the ascending support lines. A couple of the weaker ones are just back testing the 200s now. Some of the stronger ones like Marathon are, you know, very close to all-time highs. So let's jump ahead to TLT. So we saw that move in bond yields. So here we see TLT bouncing back up here to retest the 200s. So we know the longer we consolidate at resistance, be it the 200s, be it the top of this channel, descending resistance line, more likely we are to break through it. So the longer we consolidate in this area, the better this looks to me. However, we basically went from the bottom of that channel to the top of the channel the last time, again, from the bottom of the channel to the top of the channel. So more likely than not, we're getting ready for our next leg back to the downside. But right now, we're seeing like the perfect convergence between the moving averages and the indicator oscillators, because we see basically a thrust to the upside off the lows. So bearish control zone to bullish control zone. And then we see back to bearish control zone, back to bullish control zone, back to bearish control zone, back to bullish control zone. Almost, not quite get there this time. And now it looks like it wants to roll over here. So likely we're coming back down to the bottom of the range on TLT. So Dow Jones. So we've been talking about the moving averages, how important they are. We obviously have a cluster of moving averages, squiggly tool. 200 exponential, 200 simple, 8 and 21. We just lost those levels. So basically, the psychology of this chart will just tell you how all the markets essentially look right now, give or take. And when I say give or take, a couple of them look like the Dow right now. Some of them are way down here. Some of them are way up here. But they're all essentially the same thing. And what I mean is, we had a massive uptrend, bull trend, the whole time the moving averages are blue. We lose them, we back test, we go lower, we back test. We now have, series of lower highs. Then we put in another lower low. Then we come up, finally take out that previous high. Things start looking good. We're back on top of the 200s. We start flipping them over, both blue, holding support, couldn't get above the resistance, and then we break down to a new low. So the next thing that every market participant that knows anything about technical analysis is going to be looking for is, can we get back above the 200s? If not, when we retest the lows, do we go to a higher low than this one? Do we go to the same low, or do we go to a lower low? Because if we break back down to these levels, this chart is going to look a lot less bullish. The fact that we're already consolidating below the moving averages takes away a lot of the bullish strength we had here consolidating above them. But it doesn't mean we can't get back above them again and then continue higher. But it looks like with this pressure we're seeing on the markets, they don't want to go higher. I mean, it's not like there's some evil force like fighting against the markets. It's literally just market participants either buying or selling. And we saw a bunch of buying. People got bullish. They bought the dip. And then we dipped again. So now suddenly all those people that bought above the 200 moving averages all through this level potentially become sellers to try to get out even, or, at a minimal loss. And then likely we break down lower. We get the remainder of that measure move potentially down here. We see the measure move in red. We see the potential right shoulder down here. Could this already have been the low? We come up here, consolidate, and go higher. It's possible. I'm going to look to enter off of that 30,000 level. It's like 30,400. I'm going to look to enter around that level. Just taking a shot at the inverted head and shoulders, the higher low. If we do end up coming down here and threatening this low, taking out that low, and it doesn't have to just be on the Dow Jones, I'll be doing something very similar, likely on, the Qs, the Russell, what did I miss? The S&P. So essentially, I'm going to be looking at the 4 main indices to see how they kind of look. But I'm using the Dow as like my overall model and, the potential trade setup. All right, so SPY now. So we see SPY is below all 4 moving averages now, basically at the 200 simple. So it looks a little bit better than the Dow, but essentially same thing. We don't have nearly as clear of like the inverted head and shoulders pattern to go off of. We see the Qs are substantially stronger. They're actually just threatening those recent highs right here. So above all 4 moving averages. Obviously, we know that tech strength and the whole narrative behind that. And then we see the Russell, which is down here threatening those previous lows and very, very close to its macro low since its all-time high. So very, very weak. Definitely zombie trash to the full extent. XLF financial sector, extremely, extremely weak right now. I know a couple things had like a pop right here, and I know a couple of the big banks are right back at what they were at before all this went down. But overall, the sector is extremely weak. And it's just a matter of time before we see other blowups. The fact of the matter is, the longer we stay high and the really just time capitulation. I mean, the fact of the matter is, we're going to see lots of businesses go under, but they were trash businesses. And then we're going to start to see like some decent businesses go under. And then if we stay high rates for long enough, we're going to actually see like good businesses go under. And the fact of the matter is, that's what it's all about. And then the Fed at some point in time is going to find what they consider to be the balance of enough businesses are gone, enough employees are gone, enough economic activity is gone. And they're basing all of that on one thing. Well, kind of jobs, but not really, because it's just not a factor right now because we have like record unemployment, record employment. They're basing everything on inflation. So in my opinion, nothing has changed. People are like not talking about inflation. They're like, inflation's peaked, inflation's gone, whatever. I mean, it's still here though. We're not at 2%. We're at like 6%. So if we're not at 2%, that's still the Fed's focus until jobs or enough important stuff breaks. And, if this couple like trash banks is your idea of, oh, the Fed's going to pivot because something broke. Okay. Good luck with that one. Yeah, I'll go ahead and give you my address, and you can just mail me all your money because you're gonna lose it anyway. So might as well just for a good cause send it my way. What's up, Solid Gold, baby? Who is that? Peter Schiff? Good to see you, PD. And Parag in the house. What's up, my man? Solid Gold. I love it. Okay, so XLF still looks like trash, obviously. When is Greg still around? Gregory Mandarino? Is he coming? I gotta check him out real quick and see. After him being completely wrong about the banks and how he's always just, I'm loading up on banks. I'm just keep buying the banks because they pay a good dividend and they're the way to go. I want to see if he's still talking about the banks now. Freaking moron. First Republic looks like trash. People are talking about, oh, it's up like 30% or whatever. Yeah, like it's at like zero. So you're like, oh, it's at 1 penny. And then you're like, oh my God, it's at 2 pennies. It's up 100%. You're like, it was $140 and then it went down to $12 and then it bounced up to $16 and now it's back at $13. So whenever you hear somebody talking about how much something's up, just make sure, we'll just take that recent swing at 150 and see when it was at its max down, it was down 92.3%. Okay, give or take. 92%. When it was at its max bounce off of that 92% down low, it was up 85%. Okay, so that makes it seems really good because it's like, oh my God, it's up 100%. It doubled in a single day. But just remember that doubling, if you were already in this, it was the difference between being down 92% and down 85%. So you're 7% less down. And that was a 100% move to the upside in the stock. So trust your eyes, not what you hear from these BS artists. Because when it's all said and done, what did we really finish at? I mean, we finished, if you bought the absolute low to the penny, you're up 10% right now. If you were already in this on the way down, you're still down 91%. So it's all relative. Silvergate still on its way to zero, just constantly melting down. Everybody that bought the dip right now just lost like another half their money, complete trash. I mean, this is like the last knife you ever want to catch. I know people are trained to like buy bankrupt like garbage companies or whatever from like Bed Bath and Beyond and GameStop and probably like Blockbuster or what other like horrible businesses are there. Credit Suisse, obviously this is done. 91 cents. I mean, but again, we pointed this out. This wasn't something that happened overnight. Credit Suisse didn't just suddenly turn into trash. Go back to 2007. This is what a dying asset looks like. Oh my God, this is what things look like when they die. But sometimes when they're big and they've been around for 100 years, it takes a long time to die. But eventually, all the blood leaks out of your body and then it's game over. Or in this case, money leaks out of the bank, whatever. So yeah, I mean, no big surprises here. I mean, everything looks exactly pretty much what we'd expect, with the exception of the dollar. Given today's meeting, I would have expected, honestly, the dollar to at least be like minimum flat on the day because it was like essentially just what people were expecting that happened. So a little bit surprised to see the weakness on the dollar. And again, same with yields here. We got to respect the technicals. We were on the right side of this thing like magnificently from the absolute lows and played it out beautifully. But we have broken down below the 200s. We're back testing the 200s now. And this is our second time flipping them both red. And we're now threatening the lows. So I'm not saying we can't ever go to a new cycle high on this thing. But it looks pretty weak right now. Bears are in control. I mean, if it wanted to run to the downside, it could. There's still room. There is still room. And you know what? That'd be good for risk on for equities, theoretically. So Tesla had a little pop, crossed the 821 back to the upside, as we discussed the other day. Didn't quite get back to the 200s yet. I would not rule out a new pop up here to like 217, a new high, before going lower. If you're assuming we're going lower, maybe we don't. Maybe we just go straight to the moon. And it is game on. So Microsoft threatening highs here again. Looking like a pretty heavy rejection. Bearish divergence between these last 2 points. Now, this could easily invalidate. If we just got like 2 more green histograms in a row and just kept moving to the upside and the slope just picks up here and we just get up higher than that previous swing, that's fine. But this looks like, you know, this thing peaked out pretty aggressively. This looks like it's starting to get tired. Now, again, it could keep going up here, but based on where we're at right now at like 5.23 and that previous one was at 7.49, we're probably going to print some bearish divergence. Maybe not on the stochastics. I don't know. We'll see. We will see. It's worth paying attention to. But again, these things are starting to look juicy. We're back above the 200s, but remember what happened with the Dow. It was looking pretty good, and then we broke down from it. So it is definitely a situation in the market right now where, you know, we're not getting a lot of decisive answers. So we can get impatient and we can just bet. You know, we can just take guess. We can flip coins. We can do whatever. Or we can be patient and keep using the tools to our advantage. So now in hindsight, after looking at this, obviously we shorted Apple. It was beautiful. We wrote it down here. Didn't take profits here. It back tested. We cashed out of the short on the back test. And look at what happened since then. So if we would have just been stubborn and stuck to our guns, we would have basically given back that entire short. So well played by us, obviously. I mean, let me just pat myself on the back. Do you guys just want to watch like a repeating video of me just patting myself on the back and we don't even talk about trading? I feel like that's what we've become. Anyway, so we're retesting the resistance here on this descending broadening wedge. Let's see what happens. You know, eventually I do expect Apple to get down to 115. Sounds crazy when we're up here at 158, but also last time we shorted it at 170 and you know, everybody was saying it was going to the moon then. Look how close it was to its all-time highs. And instead, smash. So Google been pretty strong off that W double bottom, off the ascending support through the 382, back on top of the 200 exponential and simple. Still got a little bit of legs on this thing up here to like 111, possibly as high as 117. But this is the first time it's been back above the 200s in, well, not that long, but Meta's still strong, put in that new high, does still have this gap down here that's worth paying attention to. We'll see how that plays out. This thing is running based on cutting costs, efficiency, cutting costs, firing people, paying them less. But I mean, that's what the shareholders want to hear. Amazon, very, very weak. Very, very weak. Complete trash. I mean, if I didn't know what this actual company was, when I look at this chart, I'd be like, oh, this thing is complete trash. Why would you ever buy this? But since it's Amazon, there's a strong case for it just not going to zero, honestly. Bounced at 886 pretty nicely. That is a higher low. We're pushing up here. Are we headed up to 200s? We really got to see. I don't know what the markets are going to look like over the next couple of days. And something like this is basically, I mean, the easy move seems to be 108, backtest to 200s. But if we tuned in like a week from now and it was at 81, like I wouldn't be surprised either. Nvidia is still very strong. Decent little rejection candle here, but I'm not quite ready to call the top on this one. It does look, man, it does look pretty tired up here, but I mean, this is like one of the best charts in the stock market right now. Like very few things are at all-time highs right now. Those are the best charts. And then afterwards are like charts like this, that we're like clearly in a massive bull market. Clearly we're in a massive bear market, or not that massive, and then clearly have entered back into a bull market, accelerating to the upside, threatening previous swing highs, and only a few percentage off from their all-time highs. Well, maybe like 30%. I think we're still a ways. We're not as close as we look. Okay, 30.99%, so close enough. I was within 1%, give or take. So yeah, I mean, and again, perfect example. Look at the DXY. This thing looks like it's getting ready to go bearish. Look at NVIDIA. This is what it looked like when it went bearish, and this is what it looks like when it's going back bullish. So well played, NVIDIA. Well played. All right, let's look at some cryptos. All right, so the main thing we want to focus on here is see now that Bitcoin is, well, we'll talk about it in a second. Bitcoin dominance is the main thing we're going to focus. Spoiler alert, Bitcoin dominance is the thing that's important. It's a tool. So Bitcoin on the daily. So we bounced the 200s perfectly. We rode that out pretty nicely up here. I don't know what, do we have some fibs on here? Okay, there we go. So if we take our fib from the all-time high, like 70K, and we take it to that recent lowest low, like 15,500. The 236 was that first touch on the 200 exponential. This was our 200 sample retest. That's where we bought on the dip. I mean, obviously we bought right here, and then we bought the retest right here, and then we push up to the 382, and I did go ahead and take profits up here. We made it to the 1.5 if we take our fib from the previous swing high to the low. So our little like retracement cycle high down to the 200 simple low right here, and that gives us the fib extensions. We tagged the 1.5 like 4 times in a row and couldn't get above it. So I pulled out. I know that feeling. You think maybe you could get away with a couple more thrusts? Are you going to break through though? Is it worth it? No, I don't want to have to rely on just praying. Okay. I like to pull and then also pray. Double down. So we pulled and prayed at the 1.5. So far it looks good. We'll see though. If it starts consolidating, starts looking better, I'll get back in here. Let's switch down to our 4-hour time frame and take a look at this. So this is what I'm looking at right now. The same thing everybody else is looking at. From the bottom right here at 20K, we rode that up beautifully to, I mean, basically like the absolute top where we sold like 28K or something like that. And now we lost it. I mean, this is it. The 821 bull cross right here. We'll turn off the drawing tools. 821 bull cross right here. We're very close to 821 bear cross. So the key is to get back above 27,685. If we get back above that level, start consolidating, we're probably going higher. If we don't, I mean, we have 1, 2, arguably a third. Maybe this is a fourth. Maybe this is the third. And that's just like a little hump along the way. A little speed bump. Either way, though, we have a high right here, a lower high, a lower high, a lower high, a high, a higher high, a higher high, a higher high. We have like 4 drives of bearish divergence in a row. Depending, again, on how you look at the stochastics, too. Same thing. Just like 4 bearish divergence drives in a row. And we got a decent flush. Knife came down here pretty aggressively. But the key is that momentum of the 821. It's not crazy to think that we're coming back down here to like 24, 25K, something like that, for a little deeper retrace. But the truth is, as long as on the 4-hour we're still above the 200s, I'm a buyer. And as long as on the daily we're still above the 400s, no, the 200s, I'm a buyer. So if we come back down here, this seems like the obvious area we would retest, which is like 24.8, call it 25K. Seems like the obvious area that we would come back down, find support. If it holds, continue to the upside. And in which case, it would just be our next Fibonacci target. So if we just topped out at the 382, the next target would be the 0.5 at like 32,600. So we'd look to buy basically at 24,650 or whatever, somewhere around there. And then we look to sell again at 32,650. So something around another 31% profit. Now, if you just held right now, if you're like, oh, I don't care, I'm not going to sell my Bitcoin. You'll never get my corns. You just draw down a few percent, then go back up. And when it's all said and done, you're up 19% instead of 31%. So you still did a good job. We just did it better. And that's what trading is. Just trying to do it better. And if you're good at it, you will succeed. And if you're bad at it, you just don't ever tell anyone. And then you just tell people that you have a problem with gambling, or you're extremely generous at church, or addicted to prostitutes, something like that, so that they don't always wonder why you don't have any money. I suppose maybe drug addiction, all those things are obviously various levels of bad. So don't do that. I'm not encouraging that behavior. But, you know, being a DJ and crypto trader also, it's in there. It's not the worst of those things, but it's not the best or the least worst. So anyway, come on, we're getting distracted here. Stay on topic. So Bitcoin, I mean, it looks kind of tired at these levels. Let's see what happens. Let's see where it comes down and find support. I mean, maybe if we don't get it at 25, or maybe we do get it at 25, and then it just keeps like just tanking. I mean, I would still love to get it anywhere. Matter of fact, we have, you know, 2 touches on support right here. I mean, I would love to get it down here at 20K again. We'll do it all over again. I'll play the same trade over and over again. Do it. We could do it 10 times in a row, if that's what the market wants to do. I mean, look at Google right now. So if we just connect that previous low with this most recent low, and we just look at that, that gives us a little ascending support action back around the 236, which is also where the 200 exponential is. So Maybe we get a buy at about 22K. Realistically, though, probably around like 25K. Looking to re-enter for that 32K move. And if we start breaking down, it starts looking like trash, and we start losing the 200s again, and basically just start looking like the regular stock market, we'll realize it's not happening, and then we can flip back to being neutral or bearish again. But in the meantime, as long as we're above the 200s, they're sloped to upside, I'm bullish. All right, so we got the initial flush down to try to close the gap. Didn't quite do it. There's our gap fill. We did it. We filled the gap now. Okay. Now there's still one down here at 20K. So let's not act like it's crazy to come back down, because here we left one. We came straight back down and filled it perfectly to the penny. And then here we left one again, shot up here, left one again, closed that one. Are we going to come back down here again and close this one at 20K? I don't know. Something about that futures chart. 200 exponential is blue. 200 simple is still lagging here. Are we going to come back down here one more time just to slap people in the face? Oh, can you even say slap in the face anymore? Is that copyrighted by the UFC or whatever? Ethereum looks exactly the same as Bitcoin. It's not even a different coin anymore. It's just the same thing. We just call it different names. They have different logos, but all crypto is the same. It's all just the one thing. Even when we have drawdowns anymore, like, it doesn't even vary. Just all of them go up the same and all of them go down the same. And then just occasionally, like, it's like bingo. Only instead of like winning something, you just like lose all your money because it turns out it was a scam. So just be ready. Actually, it's not like bingo, because bingo, there's not really like that many winners. It's like it's a long time in between winners. It's more like cooking popcorn in a bear market. And like every time a kernel pops, that's like another scam or exchange or something like that blowing up. That's actually probably more realistic. So let's talk about the total market cap. So we're just at that resistance. Couldn't get above it. Kind of pushed up here. Couldn't quite get above it. That's key level. We're above all the moving averages now. I like it. We have bullish divergence. I like it. We're in the bullish control zone. I like it. This looks good on the weekly. Now let's talk about Bitcoin dominance. All right, let's start off with the obvious. I told you so. All right, now that we got that out of the way, exactly what we said happened. A giant green thrust all the way back to exactly the resistance. So go figure. We touch the bottom, the top, the bottom, the top, the bottom, the top, the bottom, the top. Oh my gosh, that's so crazy. What? So like, if you had a guess what's going to happen next, like if I just showed you this, I mean, you got to guess the bottom, right? You got to. I mean, maybe it breaks out this time, but what about all the people who thought maybe it breaks out this time, or maybe it breaks out? Probably just go back down to the bottom. So we'll see. We went from the bearish control zone to the bullish control zone. We went from the bottom to the top. So we'll see. Seems likely that we'll at least give some of this move back. All right, so here's Bitcoin dominance chart without stable coins. So this is Bitcoin not versus the world. The last one's Bitcoin versus the world. This is Bitcoin versus shit coins. Stable coins are sitting on the sidelines. They're not allowed to play this game. Same thing. We had that consolidation wedge. We blasted to the upside. That's our key resistance watch, like 56%. We made it up to about 53. And then, of course, we just expect to give some back. And again, that's why we watch both these charts, because we wouldn't have had like nearly as clear of an area as we do on that regular Bitcoin dominance chart. Knife is pretty elevated at these levels. You would think we would give some back to about 51%, which would mean that altcoins would rally. We give about 50% of that big juicy candle, and then maybe we continue higher. And I know what you're thinking. Alts could rally? What did I hear there? Calm down, okay? They're trash. They're all going to zero. Every one of them. Speaking of going to zero, here's the least likely one to go to zero, or at least like top couple. Matic. Still maintaining above the 200s. Very strong right here. I mean, it looks weak. 821 bear cross, all that stuff. Looks like it's coming back down to the 200s, but still much stronger than most cryptos. BNB still holding on to those 200s as well. Really, realistically right now, what it comes down to is, if you're like, hey, I wonder if like unicorn magic marshmallow coin is like doing well. Just look at the 200s and say, is it above the 200s or is it below them? Are they blue or are they red? Boom. You got it. You did it. You got the job. BNB at the heartline of the channel. Above a bunch of support right now. just put in a new high. Not the macro here, but if this consolidates long enough, it's going to want to go higher. But it does look pretty tired right now. So maybe a retest of like 300. Here's an example of a terrible trash crypto. Still much, much weaker. Well below 200s. Both still have a negative slope. That's probably what XYZ random crypto looks like as well. All right. Crushing through these. What time is it? All right. 35 minutes. So gold. Let's talk about gold. So gold did the exact same thing that we said. It got rejected. But then today, and we saw that weakness in the dollar. But then today it actually shot up and closed above that resistance. And just to zoom out, you know, we basically have this giant pattern. We busted out the top a couple times. It happens to the best of us. But here we had the initial blow off top and then a lower high. Here we have the initial top and then it burst to a new high. If we can get above this area and stay above this area, all we do is just fib from the macro high, all-time high, to this recent low. And I'm fib extension targeting it. So I guess we could. You're like, really? We're just going straight to the 1.618? We're not even gonna use those other ones. What the fuck? Come on, TradingView. So yeah, I mean, the obvious previous high, the one, would be at 2,076. And then after that, it's a 1.236, which is 2,205. And then after that, it's the, I mean, you could say the 1.5, or I don't ever use the 1.382, but you could. So 1.618, 2,400. And don't get me wrong, another 5% on gold to retest the all-time highs is pretty great, okay? Don't get too excited. We're not done. We're going to build on top of that. The 1.236 fib extension, a new all-time high. We're talking about 11% upside in gold, okay? Why would gold suddenly go up 11%? I mean, if they increase the money supply by 11% or do like quantitative easing or something equivalent. And then if we do hit that 1.618 target, which is crazy, it's unheard of for someone to call for insane bullish targets on gold of like $2,426. Matter of fact, I mean, I'm probably going to get laughed off the internet for even saying this, but we're talking about a 23% upside move on gold. I know what you're thinking. It'll never happen. I sound like a bulltard. I get it, but I'm just saying that is the 1.618. So while we don't want to get overly bullish yet, I mean, hold off on going to the pawn shop if we get to 2,000, because could have another $400 in your name right here just waiting for you. But obviously, gold is just stupid yellow rocks that serve no actual purpose. Speaking of rocks that serve no actual purpose, let's look at silver. XAG, substantially lower than that recent high. So gold is already outperforming silver, making it look like a punk bitch. Which, if we were like in a full-on bull market, you would expect gold to be outperforming. I'm sorry, you would expect silver to be outperforming gold. A lot of times, though, gold would lead and then silver would just like go nuts. Yeah, it's probably going to like $4. So, but I mean, but we'll back up the truck at $4 silver. So, Caterpillar, it's holding on to the moving averages for now. We do have that gap to worry about. So we bounced down, retested the 200 simple, bounced back up, retested what was support as resistance, got a pretty harsh rejection. Probably coming back to the 200 simple. Truth is, ladies and gentlemen, we come back down, revisit that 200 simple again. You can call that gap filled because we're going to 198. At which point in time, this is not going to look great. And if this starts to not look great, we know the Dow is going to be rolling back over. So we start looking at these big Dow names. Deer backtesting the 236, still on top of the 200s for now, so it looks a little bit better. UNH had a nice little move off the 886. The line in the sand, the last of the Mohicans. I know I said I would put some respect on the 886's name, and I'm close to it. I'm close to it, but not yet. We do see that bullish divergence off of key support, off of our indicator oscillators. Nice little bounce up here. But we got a lower high, so. All right, I'll tell you what. I'll admit that I was wrong for the first time ever in existence, unless you ask women. Obviously, they're going to say I was wrong about a lot of stuff, but on the channel, about channel-related stuff. If we get above 500, I'll put some respect on the 886's name, and I'll manually go through and add it to every one of my charts. You heard me, 886. Now's your time to shine. GSG coming back up to close that gap. I would expect it to close the gap. Most gaps do get filled relatively quickly. It's uncommon to leave a gap for like a long time. Didn't quite hit the measure move. It does seem like it wants to backtest 20 bucks. LNG broke down, came back up, filled that gap. So look at that. So it gapped up on that whatever that fake fundamental earnings report was, where they miraculously pulled like $5 billion out of their ass. Whatever that was. They gapped up, gapped down, closed the gap, gapped down again, came back up to close the gap. Probably going to come down to 137. I don't like how most of this stuff looks right now, especially not these energy stocks. So we saw Shell fall out of bed here with that double top M, that bearish divergence, gap down below 200s, hit our ascending support line, which is obviously, last line of support here, 200s in this ascending support. If we consolidate right here, I think this thing's going higher. I'm not convinced that there's not a bunch more inflation headed our way. Not just in the USA, just like in the world. I really think the longer time that goes by, the more countries, and the only ones that matter, no offense, if you live in one of those like trash countries that doesn't even have a central bank, and obviously I'm being sarcastic, but any country that has a central bank, they can print their own money, is potentially an inflation time bomb, just waiting to go off. And I'm going to tell you right now, China is already doing quantitative easing. You could argue that the Fed just did quantitative easing. I don't look at it like that because, honestly, even though it's not like officially going to the discount window, what is the Fed really doing? They're just saying like, okay, if you're having issues with liquidity because of duration mismatches, because what is the asset that they're having problems with? It's treasuries, which is the best asset on planet Earth. And that's not my opinion. It's a fact. So if treasuries are the best asset, U.S. treasuries on planet Earth, and a company's holding them, and the only problem they have is duration. If they just hold them longer, they get all their money back plus interest. So they're really just out the cost of that money, the opportunity cost of getting more money somewhere else, more interest. So realistically, all you're doing is just saying like, hey, if we did cause this, duration mismatch or whatever other issues may have stemmed from it, we'll give you the liquidity you need so that liquidity doesn't lead to insolvency. But it's still a loan. So you could argue that they're putting liquidity back into the system, so it's quantitative easing, but it's really not. And I know people are like, oh, they'll just make up reasons why it's not quantitative easing to trick all the dumb people because they're dumb. Well, like, honestly, like, if I told you, all right, just break it down to the most simple thing in the whole world, okay? If, like, we're high school kids or, like, friends or something like that, and we're at lunch or whatever, and you forgot your wallet that day, okay? And you know me well enough or whatever, or you know that I'm an opportunist, and you say, hey, if you buy my lunch today, I'll pay you back on Friday. I forgot my wallet. And I say, okay, with interest. And you're like, okay, cool. So I'm going to borrow $10 from you today, buy lunch, and then on Friday, I'm going to pay you back $15. Okay? So when Friday rolls around, you didn't get your paycheck from work for whatever reason, or your parents didn't give you their allowance or something like that, whatever the reason was. So then you show up on Monday to school again, and you don't have my money. So rather than me beating you up, because that was our agreement, you pay me back $15 on Friday, or I'm gonna beat the shit out of you, you know, because obviously I'm a bully. You can tell that clearly if you've been around for any amount of time. So I'm gonna bully you, you know, loan shark you into this loan. The truth is, if the only issue is really I just have to wait till the next Friday, and you know the trust isn't really the problem, which the Federal Reserve can just print money because they're a central bank. They're not really out anything else by waiting till Friday. And then they're still going to charge you interest. So I'm like, okay, the VIG is still running, baby. So sure, I don't beat you up because you're late. You get your extra, I get my extra $5, and now you're going to have to pay me another $5. So you're going to pay me the following Friday, but you're going to pay me $20 now. 10 plus 5 plus 5. That's all the Fed is doing right now. So instead of beating the shit out of these trash banks, they're just saying, okay, but the VIG's still running, baby. So I guess, yeah, we're technically injecting liquidity back into the system, but I don't know. I don't think anybody else has said it as cut and dry as I have. And I imagine right now that was like a light bulb going off in your head and you're like, oh, I get it. The VIG's still running. So yeah, we'll leave it at that because I don't think there could be a more clear example. So MOS, retesting the lows right here. Giant descending triangle. We know if this thing falls out of bed where it's going, 32. But realistically, we might nail this bottom again and again and again and again. There's still plenty of room for this thing to just squeeze up and down inside this range. Most important thing is just that same low and just lower highs. That's all we're looking for. Same low, lower highs. ACB, so I almost said trash cryptos, but it's not even. It's even worse than most cryptos. Trash pot stocks. We know where this is going. It's at 70 cents now. It's going to zero. It might. I should have just done this. Oh my gosh, what is happening? Should have just done this from. Oh, there's the 1.382. Where were you at before when I was looking for you, little buddy? Were you hiding on this chart? 1.382, I guess we'll count it this time, but I never use it. 47 cents. 1.5 is actually what I'm thinking. Let's just make this box bigger and just say, look, if this thing goes to zero and we get it between 18 and 29 cents, I mean, let's be real at this point in time. When do we just chalk up these pot stocks as just going completely bankrupt? Actually, I think it might be better if some of them declared bankruptcy right now and maybe someone would actually buy them. Like, not like an actual company because clearly they're trash. But like, you know, Wall Street bets or something like that. And they could like pump it back up. It's pretty much our only hope at this point in time. Tilray looking pretty rough right here. Back at the lows. I don't know, guys. I don't know. There's a lot of stuff that looks bad right now. There's a lot of stuff that looks like it could go either way. And then there's pot stocks. Dear God. But you know what, though? These things have been melting down for so long. Everybody's at a loss now. They're just getting beat up so bad. Oh, yeah, that was it. I wasn't going to say anything. There was no, like, redeeming factor or anything. I, like, pretty much, if you, like, heard of pot stocks, like, you probably wish you didn't. No, I shouldn't say that. We've actually had some really nice pot stock trades. But, dear God, I can only imagine. We had, like, the most, like, ridiculous bull run ever in all of existence. And all they did was go straight to zero. I know what you guys are thinking. Wait, you're not going to look at XRP? I'm not, guys. I'm not going to do it. Sorry. URA. So we've been talking about these uranium nuclear stocks, and they're looking pretty bad. Again, we have a giant descending triangle. Some of them look a little bit better. Some look a little bit worse, but they all look like they're ready for the next leg down. And I know what you're thinking. You're thinking they can't go down if no one sells. So everybody diamond hands. Because there's a shortage of uranium. All right. Okie dokie. So Neo. So we were talking about this one a little bit in the group. So we'll go into a little bit more detail here. You guys almost got the drinking ASMR, but I spared you this time. So this is what, all right. So got a pretty detailed chart right here. And I know it looks like gibberish, but I promise you it's not. So 2017, this thing is like $8, which is basically where we're at right now. It chops around in this area. $6 is the low, somewhere around like 12, 13 is the high. And then it breaks down to new lows. Once it loses that $6 level, it just melts down to $2.50 and then literally to zero, or $1.20. Figuratively to zero. Okay, very, very close to zero. And you're like, so wait, does that mean pot stocks could do this? They could. They could look like this one day. And that little high they had right here, it's like up 100,000%. And you're like, I knew it. I knew XYZ cannabis company was going to make me rich. It could happen. But that being said, once it got down here almost to zero, went on this rip-roar rally. And realistically, if this is our 1, that's our 2, the retracement of the 1. This is our 3. We're in the middle of the 4, retracement of the 3. You know, essentially, if we don't lose $6, it looks fine. If we don't start closing long time frames below $5, it looks fine. Obviously, we had an insane rally, an insane bull market, and this is an insane bear market. And we're at the lows. But if we slap our drawing tool back on and we look at that drawing, you know, this is what we were talking about. The 1, the 2, the 3, the 4. And if we look at the fib, you know, we have our macro low right here in blue. We come up for the 1. We have a 618 retrace. And then we come up for the 3. And then we just hit. Keep in mind, I drew this a long, long time ago. It was in this galaxy, though. It was not. It's not in another galaxy that was far away. So we hit our target. I mean, that was it. We like been calling for this for like, I mean, at this point in time, it's I don't want to say for years, like Peter Schiff years. Like, I've been calling for the end of the financial system in years. I'm like, yeah, 30 years, dude. 30 years. You've been wrong. But every once in a while. So that's it. 618 retrace right here. That was our target. It wasn't quite as purdy as we had hoped. It ended up a little bit something more like this. But when it was all said and done, Daddy got his nut. Okay? And this is it. $8. So what's going to happen from here? I don't know. The real option is we either start having an aggressive move back to the upside, and that was the bottom, or we just go lower. So the 786 is at $4.50. At some point in time, though, you know, the upside to downside risk reward is just like insane. Because if we ever go, and I'm not saying this will happen. This is a trash company. They don't do anything. It's not like they manufacture cars in China or anything like that. This is literally a cryptocurrency. Okay, there's no fundamental or technical news. It's garbage. It's fully speculative. There's nothing behind this at all. Technically speaking, though, and we're just pretending. Obviously, it's a real company that makes cars and stuff. But technically speaking, if we do ever get back to that previous all-time high, which is not something crazy, it's $68. That's 662% upside. The alternative is we go straight to zero. Even if it's in a single candle. Just boom. Just China closes it down. Shut it. Sorry, guys. We're shutting down NEO. It's trash now. Straight to zero. If that happens, the most we can lose is 100%. All the money. All of it. Everything we put into it. But the upside is still 662%. So the risk reward of right now just saying, you know what? I'm going to take a stab at NEO at the 618 at some key support levels with a 662% upside and a downside of 100% if it goes straight to zero. I mean, it doesn't look like that terrible of an ordeal. I mean, it's like, you know, it's over 6-to-1 risk reward ratio. So, I mean, it looks terrible though. But when you look at this, you think if this thing's going to stop anywhere, there's only one place it can stop. This is it. If it doesn't stop right here, then this is it. And that's $4. So this is it. It's either $9, $6, $4, 0. Those are the only options. I mean, my bet is 0, but is it possible that we could make some money in the meantime? Yeah, I think we probably could. And if they come out with some kind of product that people buy and this becomes an actual company and not just some crypto trash, which I'm fully joking. There's also a crypto trash named NEO, which probably is awesome. I don't even know what it is. Something about the Matrix, I think. But this NEO car company, take aside all the fundamentals, whatever, you know, because we can always build a fundamental case. We were talking about that in the group too. But technically speaking, I mean, this is it. It's either, $9, $6. Where's the best confluence at? I really like the confluence off the 618 and also the previous lows right here. Also this little cluster. We don't really have a decent confluence point after that. So this is it. This is where I'm putting my bets in. Nothing crazy, okay? We just assume whatever we put in here is going to 0. And then maybe we hit that 6-1 risk reward. And honestly, let's be real. If suddenly we just jump up to 14, am I just going to immediately take my initial investment back off the table and then just let the rest run? 100%. That's exactly what I'm going to do. Baba. So Alibaba, man, you guys are making me like, hey, get on here and act bullish about China. Okay, I guess. That was not the plan today, but it is kind of happening. So BABA, we were talking about this inverse head and shoulders, similar to what we were talking about on the Dow Jones. Probability of this failing is very high, probably at least 50%. But, we talked about that little 40% upside just to retest the neckline. And then if we do hit the measure move or even just back test the 618, talking about 92%. If we start testing the lows, if we start breaking down below this previous swing low, we're out like trout, okay? We're squiggling free like a slick fish. Just trying to get back in the stream. Yeah. So I think I'm going to leave you guys with that. That little bit of wisdom. All right. We did it. We looked at the cryptos. We looked at the stonkeroonies. Oh, I know what you're thinking. You're like, really? No GameStop? I mean, do you guys want to? You really want to? We got a second. Which one? Do you guys want XRP or GameStop? Which trashy thing that I don't want to look at do you want to look at? Let me know in the chat. No, honestly, I really don't care. I really don't, honestly. I don't mind it. I'm honestly really happy that GameStop shot up here because we always joke around it in the group, and a couple of the bros in the group actually took some positions on this trash. I'm starting to think you guys are part of weird pump and dump groups, but whatever. I mean, I'm not going to judge you. I don't even know what this is, so let's just delete that really quick. And then look what's going on here. So we just put in that lowest low and then basically got the gap up to retest the 200 exponential on simple. So now there's a massive low right here. What was the gap up based on? GameStop made a profit. They actually made a profit. I'm sure there was some trickery. There's something crazy going on. But you know what? Honestly, maybe not though. How is GameStop not actually the best company ever? Because if you've ever been there before, I mean, it's ridiculous. They charge you insane prices. And then you could literally buy a game from them and they're like, you know what? You don't even leave the store. You still have your receipt and everything. You're like, I got this $75 game. The old wifer's going to kill me. Or my kid's a piece of shit anyway. F it. It was a bad idea. I don't want this game anymore. And they're like, oh, no returns. And you're like, I have the receipt. I'm still in the store. I just bought it a second ago. I'll just cancel out the transaction. And they're like, we could buy it back from you, but we don't accept returns. And you're like, buy it back? This is insane. It's still in the package. And they're like, we take all that into account. Just give us a minute. We're just going to look over. We're just going to look over the game. We'll let you know how much it's worth. They turn right back around. They're like, in this kind of condition, sir, this game's, nobody really wants it. It's trash. We'll give you $4 for it. You're like, I just bought this game for $75. Didn't even open it. Didn't even leave the store. $4? And they're like, I know, right? So that's pretty much the best business ever. So maybe I'm missing something here. Maybe this is a good investment. Yeah. Matter of fact. So yeah, that's it. It just backtested the 200. So reversion of the mean. Is it still trash or is it suddenly good now that it makes money? It's less trashy. But that's it. It's still trash though. What's up, Durwood? Great stream. Many thanks. Light bulb just went off. Awesome. Good to hear, brother. That is awesome. All right, so we did it. We made it to the end. Woo. So yeah, that was pretty cool. Hope you guys had fun. We looked at some charts. We took advantage of my dry humor and sarcasm. I enjoyed myself. We learned some stuff together. We saw lots of colors in charts. We drew things. We did another squiggle theory. Yeah, all right, we'll wrap it up there. I think that's enough for one day. I don't want anybody's brain exploding with all this knowledge. So we'll see what happens here. Obviously, the Fed meeting was a big deal. So there's a lot of build up to it. Oftentimes, they're anticlimactic. But we do oftentimes see like a run up or a sell off leading up to them. And then they will act as a sort of like pivot point in the market. But the truth is, the narrative, I think, is going to stay fairly bullish as we approach either no more rate hikes or one or maybe two more rate hikes. And then it's not going to be until later in the year, if we still have, strong numbers coming out and, unemployment staying low, labor participation continues to rise. I mean, off of low levels, but rising nonetheless. I mean, there's a possibility stocks keep ripping. And then, I mean, depending if there really is QE going on, if we do see a bunch more QE going on, we could definitely see another round of inflation. I'm sure there's some inflation in the pipes that's still baked in that hasn't quite got delivered yet. You know what I'm saying? It's marinating right now, getting ready to serve up a hot inflation pie. I don't know. Do you marinate pie? I guess it was like rhubarb or something like that. So we'll see. If we could sit here right now and theory craft like 5 different situations that are extremely bullish and 5 different situations that are extremely bearish. And if you told me like 2 years from now or 5 years from now or whatever time frame we're looking at that like the most bearish one played out or the most bullish one played out, I wouldn't be surprised in the least bit. Because like we don't need some crazy situation to have new all-time highs. We just need inflation. That's all. Or we could have just a really good economy and not inflation. But all it takes is inflation. It's like, oh, we just had some of that. Could we possibly get more? Yeah, I'm sure we could. So are central banks still dumbasses? Yep. Okay, then I wouldn't rule out more inflation. And then same thing, if we talk about, we're going into a recession and it's a global recession and, reopening narratives don't play out or the consumer is actually like more squeezed than they were or more extended than they were or banks are tightening up on top of the rate hikes, on top of all the other stuff going on. Yeah, I could totally say we would go into like a recessionary or like arguably like depressionary period, but let's start small here. So I think we could definitely get like crazy extremes. And same thing with Bitcoin too. Like if you told me Bitcoin's going to hit $100,000 before the end of the year this year, I would not even be surprised at all. $250,000, I don't know. That's probably a little too far for me. But same thing too. Like what's your line in the sand to the downside? Like I could see Bitcoin back at 20K like a couple weeks from now. Let alone, if we go to 20, I mean, we might as well go to 15, which is new lows. So could we still go to new lower lows this year and then afterwards go to 100K? Yep, I could totally see that too. Could we go to 100K and then go back below 15K? Probably not. That one's, I think, less likely. But the truth is right now, there is a lot going on. If we see the dollar continue to break down and weakness in that, I get substantially more bullish on stocks, not only US stocks, but, also the emerging market trade starts to look nice or potentially, I mean, Jesus, don't put me on the spot here. Depending on the actual sector, but some other various country stocks, potentially, I mean, we said pot stocks and mining stocks, but dear God, those are all gone to zero now, I think. But I mean, there's an argument for it. I think I like more of like the Brazil trade than that, but we'll see. There's a lot of narratives to be built here. They're going to develop over time. We got a lot of lines in the sand here. There's going to be some really nice opportunity. Obviously, the crypto trade, at least short term, looks like it's coming to the end. But I don't think that we should rule out crypto right now because if we do see Bitcoin dominance start coming down, even if Bitcoin starts topping right here, we could see just random shitcoins start popping off one after the other. Just poppity popping. Okay? It's like the popcorn example from earlier. But instead of a scam exploding in your face, it's like a 30 to 50% move in some trash crypto. So we'll see. But yeah, that's it. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research, trade responsibly. It is March 22nd, 2023. I am, of course, Crypto Trend Trader. And what's up, Hex Evolved? Rhubarb pie. You gotta be from the prairies. Bro, if you only knew. No, I'm really not. I mean, I kind of am. I don't know. Not really. Let's just say my family wasn't making rhubarb pie, but had some diverse friends when I was growing up. So, yeah, I don't even know. Do they have that anymore, or is that just for us old people? I don't think young people are getting rhubarb pie. Are they serving them up at the supermarket or whatever? I don't think anyone's actually making rhubarb pie. Pretty sure anybody that ever baked a rhubarb pie died of old age by now. Pretty sure. So yeah, let's wrap it up there. It is 9/11 on. We already did all that stuff, so that was fun. I had a good time. Hopefully you guys did too. It was fun watching the meeting today. It's awesome that we get to determine where the markets are going to go by the exact like whim and words of Jay Powell. Awesome, awesome. Us old guys, 100%, bro. No young people know what rhubarb is. In the UK, we have rhubarb crumble. See, that sounds pretty good, actually. I'm not gonna lie, too. Like a good rhubarb pie is absolutely amazing. Not my first choice, but if you're like, oh, we got some pie, I'll get like really excited, and then you're like, it's rhubarb though. I'm like less excited, but still, it's pie. So, but yeah, let's wrap it up there. Hopefully, everybody had fun today. I know I did. Crypto Trend Trader, and I am gone.